Hey guys, happy Monday. Right, so we're talking about Zoom video communications today, and that is ticker symbol ZM, not to be confused with the other symbol ZOOM. But we've seen so much insane growth out of Zoom video, especially since especially since the big shift to work from home. I mean, shares are up more than 300% year to date. So the company reports earnings after market today, and analysts are expecting them to report 45 cents earnings per share on revenue of about $500 million. But it seems like the future of Zoom is sort of up for debate. When I was looking on social media today, I ran across really two main outlooks for how Zoom will fare in a post pandemic world. And I want to run through both of those outlooks with you guys. So, the first tweet that I have, I want to introduce, and this is talking about sort of well, I'll just go ahead and read it. So this tweet says, I can only see Zoom smashing earnings expectations today, but I think this is likely to be the beginning of the end for them. As schools reopen and competition improves, it's troubling for Zoom. So in this case, Zoom would become obsolete when people return back to the office, when schools open back up, like that tweet said. And they also mentioned the competition. So Microsoft owns Team and Slack, both of which are competition for Zoom in this video messenger space. Teams more so as far as the professional level, and Skype more so for personal interactions, I would say. And then as far as personal interactions, Facebook also recently launched their Facebook Messenger Messenger Rooms. Sorry about that. Facebook Messenger Rooms, which is also going to be a more personal aspect as far as that video communication space. But the next tweet that I found for you guys talks about a different outlook for Zoom. And in this tweet, the Twitter user said that I would very much endorse a 3-day work week in office and 2 days work from home. With the help of modern communication and collaboration tools like Slack, Zoom, and Zeppelin, it's doable. So here we're talking about a future that's a little bit different from from what the first Twitter users said. I mean, here it would really depend on how corporate America changes and it changes in the post-pandemic space, whether or not we become more remote flexible and allow employees to work from home on a part-time or even full-time level. I mean, with that mindset, Zoom would not become obsolete because people would still be using these services when they are working from home. Um, but again, I mean, all of that is so uncertain right now. And we do know how much the market does not like uncertainty. I mean, a lot of us don't know where we're going to be in a year from now, especially since we're seeing some more surges in the virus here in the United States. But Kevin, I want to ask you, as far as the future of Zoom, I mean, the shares have run up so immensely. People are excited about this earnings report. What are analysts looking for in this report? What's the biggest thing for Zoom?
Evelyn, I want to address some of the tweets that you had because I think they were significant. And the new fresh demand for Zoom cannot be argued, right? I mean, Zoom think of what percentage of the U.S. economy never heard of Zoom, but now use Zoom. That number is probably a catastrophically large number. And so when back to school, your one fear that your tweet said, when back to school happens, Zoom will become obsolete. I have a 14-year-old daughter in the next room right now. She goes to school every other day. You know what she is right now? On a Zoom call with her school. So that stickiness that we talk about so much about the new pandemic, I think is going to stick with Zoom. But what can hurt Zoom? A drop off in demand, absolutely, as things start to reopen. And the other one is the competition. I think Microsoft is a real competition for Zoom. So those are the things you have to be careful of. But as of right now, I think Zoom seems to be the leader in this space right now, guys.
Yeah, Kevin, it's certainly an interesting conversation. Those are great points. And that second tweet, Evelyn, I think is very, very interesting because I think that one thing that's almost certain is that the disruption of the traditional workspace, traditional work week is real. And something like that, I think, is going to be fairly common potentially across many businesses across the US going forward, as well as the world. So we'll see how it shapes up and what that means for companies like Zoom and some of their competitors. But Evelyn, we got to leave it there. Great stuff as always. Evelyn Baker, TD Ameritrade Network contributor. As we say goodbye to Evelyn, we want to welcome in Landon Swan, the co-founder of LikeFolio.com. And Landon, I want to dive into the data as soon as we can here, but to me, this is an excellent story about things moving right to a particular business that you're in. But to me, this is a marketing story. Somehow Zoom was able to outmarket all of these massive big tech firms and make their product the verb of this space, but the most popular one really across the globe, from what I can tell, in terms of video conferencing.
Yeah, they did a great job. I mean, this is, when you get down to it, it's really not a difficult software to build. It's difficult when you scale it out to hundreds of thousands of users simultaneously. And for the most part, Zoom's done really well at that. They had some trouble as students came back to school, had some server issues there. But generally speaking, this is not a super innovative type product. It's just a matter of getting people to use it and getting that sort of viral effect where everyone's using it, so everyone uses it. But they have had, obviously, that right place, right time kind of company. They IPO'd not that long ago. And they're about 5x since IPO, which seems about right given what has happened with quarantine and forcing people to work from home, school from home, that kind of thing. And what's interesting is we look at people talking about not just working from home temporarily, but permanently. And that data is very interesting. Obviously, that's going to be good for a company like Zoom and just the space in general. And that chart obviously flew up right away on quarantine, but has sustained and getting a lot of new people coming in. So now when you're looking at this chart, keep in mind, this is people talking about, I'm going to be working from home permanently from now on. So this isn't, this is an aggregate effect. These are the new people every day saying this. So this chart, if you look at the total number of people working from home, is going up and to the right. We're looking at the rate of change of that, and it's still growing. So very strong here, obviously good for Zoom. But when you look at the quarterly mentions for Zoom, it's obviously you're going to have a huge boom around March and April as people are starting to figure this out for the first time. Big drop off after that. Current quarter's picking back up as students go back to school. What's interesting, though, is you've got a company that is coming in at about $500 million in revenue per quarter. That's what the estimates are, and it's valued at $86 billion. So it's trading, about around 200 times revenue, which is a really high multiple. And then if you get into the PE ratio, it's astronomical. It's nearing 2,000. So, it's tough to really justify the price at this level. I think that 5xing after the IPO makes sense, but I think maybe they were overvalued at IPO and they've stayed overvalued. To Kevin's point, I agree completely. I think competition is their biggest threat. I don't even think it's necessarily everyone going back to work, even though that is definitely significant. I think that a bigger threat to them is someone coming in and figuring this out, not just Microsoft Teams, but a new company perhaps that has more features, works better for schools or universities, or works better for office, has more features, and just is a little bit more niche oriented. We could have 5 or 10 Zooms over the next 6 months come out and be picking away, and schools might switch and say, let's go with this other type of company because it's better for this situation. Offices might go with a different one. So when you talk about having a valuation 200 times revenue, that gets a lot of VCs very interested. There's a lot of entrepreneurs out there thinking, hey, I could build a Zoom and let's focus on this segment. And so that's what worries me about Zoom, and at these prices, I'm not touching it.
Yeah, Landon, I agree completely with what you're saying. And your data seems to back up what I was talking about with Evelyn. And that is, this company was basically at zero. It went to astronomically high numbers, but the stickiness factor, it's still going to be a viable company. That, this demand is resting at numbers exponentially bigger than what it was. But the valuation is insane. Competition, remember, you talked about Microsoft. Remember, Facebook has their rooms as well, where that's another competition for this. So it's just a matter of when this competition shows up and shows up big, not if, because people are making bets that the stay-at-home economy is going to linger for a while. It's not going back to 100% in the office. So the lifespan of these companies, this is not like a short-term thing we're talking about here. These will be around for a while. So the one that does it best is going to garner, followers. And so Zoom's got to continue to do it best like they've done so far, frankly, but that doesn't guarantee anything in the future, guys.
Landon, real quick here, because we got to wrap this up. I got a question for you. I think to understand this company and how we got here, I got to ask you guys watch consumer dynamics. You watch these consumer trends all the time. How did Zoom do this? How were they able to, was it accessibility? Was it quality of the product? Was it ease of use? Was it all of these things? Why wasn't this Google Hangouts that was Zoom? Why wasn't, I guess, Microsoft Teams and Cisco WebEx, I guess, are more kind of corporate focused and maybe relationships that those companies have with the firms mattered. But from what I understand, Google Hangouts is anybody can use that the same way you can use Zoom. Why was it Zoom?
It's the UI and the UX. It's just user interface, user experience. They dominated that. Google Hangouts has been around for quite a while, and no one thought of using them when it came to quarantine and seeing your friends or working from home or doing workouts or whatever it may be. Zoom was super easy to get started. You could be up and running within probably 30 to 45 seconds without even putting a credit card in. Just try it out. And then halfway through halfway through your call, they say, hey, you want to continue and subscribe for a month? It's only $9. The user experience was incredible. The upsell throughout the experience was incredible. They did a really good job on that. I think that's where they nailed it. However, now it's becoming more of a common thing. And, when they first started, maybe, before quarantine, they were 87% happiness. Which is extremely high. Now they're sitting around 62% happiness. And there was a security concern issue that caused that. There was a server drop that caused that as students went back to school. They're still higher than Microsoft Teams at 54, but there's a big drop in happiness as people start to use it. So they're great at getting people in the door, not as good as keeping them happy. And again, the valuation is just insane. I mean, I think they're running around 68% marginal variable margins, but 7% overall because they're spending a lot. At least they're profitable. But when you get these kind of multiples and you get this kind of variable margin, you're going to get more competition coming in. So if work from home, school from home sticks around for 6 months, 12 months, God forbid, let's hope not. But if it does, you're going to get a ton of competition coming in, not just from the big players, Google, Microsoft, Facebook, but from a lot of startups, and they're going to eat away at this customer pool that Zoom has right now.